Tonight, a political earthquake is rumbling beneath North America's economic foundations. Behind closed doors, in a room where handshakes are usually predictable and press statements are carefully polished, a single word was delivered that may redefine the balance of power between two of the world's closest allies. No. Mark Carney refused America's trade demands, and what happened next could reshape supply chains, financial markets, and diplomatic strategy for years to come. And what officials are calling one of the most tense bilateral exchanges in recent memory, former Bank of Canada governor and prominent economic heavyweight Mark Carney took a firm stand against a package of trade concessions reportedly pushed by U.S. negotiators. The demands, according to sources familiar with the talks, focused on regulatory alignment, energy exports, and strategic manufacturing guarantees designed to favor American domestic industries. But Carney's message was clear. Canada will not be pressured into compromising long-term economic sovereignty for short-term diplomatic comfort. The standoff unfolded against a backdrop of rising global economic uncertainty. Inflation pressures remain volatile, supply chains are still recalibrating after years of disruption, and geopolitical tensions are redefining trade alliances worldwide. Washington's strategy, insiders say, aimed to secure tighter economic coordination across North America to counter rising competition from Asia and stabilize critical industries such as semiconductors, electric vehicles, and energy infrastructure. But Carney reportedly warned that excessive concessions would risk weakening Canada's bargaining position in future global negotiations. What makes this moment extraordinary is not simply the refusal itself, but the timing. The United States has been aggressively renegotiating trade frameworks to secure domestic manufacturing growth and protect strategic industries. From tax incentives to tariff adjustments, Washington's economic playbook has shifted toward economic nationalism. Carney's refusal signals that Ottawa may not be willing to fully align with that approach if it undermines Canadian regulatory independence or market flexibility. Market reaction was immediate. Currency traders watched closely as the Canadian dollar showed brief volatility before stabilizing, while investors weighed the broader implications for cross-border supply chains. Analysts suggest that the refusal could either spark tougher negotiations or ultimately produce a more balanced agreement built on mutual leverage rather than unilateral pressure. The message from Canada appears calculated. Partnership, yes. Dependency, no. Political observers say this move could also carry symbolic weight beyond economics. Canada and the United States share one of the world's largest bilateral trade relationships, deeply integrated across automotive manufacturing, agriculture, energy, and technology. A public refusal, even a diplomatic one, sends a signal to other middle powers navigating similar pressures from larger economies. It suggests that economic alignment must come with strategic respect. Behind the scenes, officials are now reportedly reassessing negotiation strategies. American trade representatives are said to be evaluating alternative incentives, while Canadian policymakers are emphasizing resilience, diversification, and multilateral trade partnerships. Carney's background in global finance, having also served as governor of the Bank of England, has shaped his reputation as a steady yet assertive economic strategist. Those close to him describe the refusal not as confrontation, but as recalibration. Critics in Washington argue that tighter North American coordination is essential to compete globally and reduce reliance on external supply chains. They warn that resistance from allies could slow economic integration at a time when speed is critical. Supporters of Carney, however, say the refusal demonstrates leadership rooted in long-term stability rather than short-term political optics. They argue that true partnerships require equal footing, not compliance under pressure. The broader question now is whether this moment marks the beginning of a deeper policy shift. Will North America move toward a more transactional economic model, or will this tension ultimately strengthen negotiations and produce a more resilient framework? Diplomatic sources indicate that talks are ongoing, and neither side appears eager to escalate publicly. But the tone has undeniably changed. Size. As the dust settles, one thing is clear. This was not just another trade meeting. It was a signal, a declaration that economic alliances in 2026 are evolving. In a world where supply chains are strategic weapons and trade agreements shape national security, saying no can be as powerful as signing a deal. Mark Carney refused America's trade demands. And whether this becomes a turning point or a temporary storm will depend on what happens next.